Welcome everybody to Crypto Rosetta. My name is Savage. Today we're going to be having a look at AVAX. This is going to be a lower time frame video. We do have our higher time frame video up above, so check that out if you haven't already. Let's get into the charts and see what's going on. Before we jump into those lower degree counts, we're going to be going over some of the higher time frame ideas that we're looking at here for this move to the downside. So within the higher time frame ideas, what we have is a couple of ways we can look at this. So this would be looking at this as a 5-wave move, meaning that this would also actually look to complete lower down here with a truncation in this wave. Now, within this idea, what we'd be saying is that we are looking for potentially 1, 2, 3, 4, 5. Now, it is possible that we could argue that this 5th wave completed into this low here, and what we could actually have here is a bigger corrective structure looking at something like a bigger flat correction. Now we could also argue that this B wave has completed into this point here. The problem is that this B wave would be very short in time duration if this is the case, so this is why I'm still open to the idea that either we are within this B wave or we are in fact still within the 5th wave here. Now with this idea here, if we are looking for a bigger corrective move here, then potentially we'd be looking for a bounce up between this 82.91 to this 28.86 before actually looking for continuation to the downside in another leg. Now we would expect this to be similar in time duration to the first part of this move down if this is going to take place. So this could mean that we could see prices looking to fall for a longer period of time if we are looking for this option of seeing an additional C wave to the downside, but we could still have a substantial bounce up in this B wave. Now if we are actually still within the 5th wave, what we could argue is that this 4th wave actually completes into this high here, and we could be looking at something more like a diagonal pattern here. Now within this idea, what we'd be saying is that this is 1, 2, 3, 4, and we're looking for a 5th wave to the downside here now in a ABC pattern. Now the problem that I have within this idea here is that this move over here counts right as a 5-wave structure. So if we do have this as a 5-wave move and that is our A wave, there's not a lot of room here for this to play out, and what we'd have to then see is price actually stop before the 740 level. So if we do see something like this where this becomes A, B, and we see a shorter C wave here, potentially we could be looking at something like this taking place, but we'd have to be very careful here because within this idea, like I said, if we have this move to the downside here as our A wave, we'd have to actually complete somewhere between this zone here of the 0.618, which would sit here at this 809 and this 740 level. We don't want to cross that level. Now there is a way that we could potentially still look to push down past this level as a diagonal, but this would be looking at this move slightly different. Now if we want to argue that instead what we have here is that this is A, B, C, D, and E as a triangle, then potentially we could be looking for this diagonal to start from over here, and what this could mean is that we still have a leg to the downside to complete the 5th wave as well, except what this would do is this would change the way we look at this slightly, where this is 1, 2, 3, 4, and we're looking for this 5th wave down. Now within this idea, what we'd want to not see is a price move back above this 1186, and we'd be looking for a 3-wave move to the downside, not crossing this 744 level. So much the same as the other idea here, but what we'd be looking for is a 3-wave move. What we'd be looking for is something like this to play out, where effectively we have this as our A wave, we're looking for a B wave up and then a C wave down. Now what we can see within this idea here is that if this B wave is actually completed here, we could be starting the C wave, in which case we'd be looking for a move down between this 0.618 here at this $8.27 to this 743. If we look at the current structure that we got here on a smaller time frame, what we'd then be saying is that what we want to see is that this is 1, 2, 3, 4, 5, and we'd be looking for this B wave. Now this B wave typical rejection area here is between this 992 and this 1116. If we do see price look to push back up here, where this move actually becomes a 3-wave move for A, this becomes a B wave, and we see a C wave, we could still see a bounce back up here to this 994. This would be an interesting level here because we have these two highs, so we'll be keeping an eye on that. This would also align with coming back into the 0.382 at this 992 level, and then we do have some structure on this side here to keep an eye on as potential resistance, which could come in around these levels. If we're going to see something like a flat correction here, the most common target area for this to be an ABC would be between this 1027 and this 992. So I'm going to be looking out for this because we have come down into this zone here of this 786 to this 854. So this is technically done enough, and if we want to subdivide this move as A, B and C, then potentially this could have actually done enough here. Now, if we do continue to look to hold this low, there is some bullish options, which we're going to go over in a little bit. But effectively, if we hold this low, we could actually see something more impulsive starting to develop to the upside. But until that point, we need to be very careful because the clean account actually is to the downside here, where we could still see at least another leg down here towards the zone of this 827, which would be that 0.618 of this first move here. So going to be keeping an eye on this zone. This would also align with coming down towards this 0.854 here at this 832. So going to be keeping an eye on those levels if we do continue to see the price looking to push down here, and we're looking at this as a diagonal. Now, if we do form something like this as a diagonal here, what this would just then mean is that within this idea here, this A wave actually just moves down here, and then we'd be looking for that potential of this B wave still to bounce to the upside here. So this is slightly different to the idea of this being a flat. And if we are looking at this as a flat, we'd have to say that we completed further back here. So that's the two ways that we're looking at this as a 5-wave move. If we're looking for that possibility of a flat, what we could see is that this zone down here of this 1236 to this 1618 at this 891 to the 678 level could still align with actually giving us support here in this yellow B wave before looking for the C wave up. Now, given our current area that we are here, if we had to see this turnaround from this point, what we'd be looking for typically would be between this 1618 here at this 2712 to this 2061. We don't have any indication of any impulsive structure to the upside here, so we need to just be very careful here that this Y wave is not still in play in this idea, because if we do see this move down one more time, then the probability is that we are actually still within this Y wave and could be looking for this 741 to this 618. So that would then look to actually invalidate that idea of this becoming a diagonal if we look to move down into these lower target areas, and then this would make it more likely that either this is a flat or we're following the corrective count, which we're going to go over in a second. So within this idea of a flat, what we're looking for is support to come in this yellow box, and then to see a 5-wave move to the upside. So going to be watching this level. If we do look to find support in here, it could be quite an interesting zone to keep an eye on. Now, if this Y wave here, this blue Y wave is incomplete, what we would be expecting to see is a move like this, where this is W, this is X, and we're looking for this continuation down. Now, within this, if that Y wave is not complete, we'd say that this is A, B, and C. And what we'd be looking for is a move down here between the zone of this 640 to this area lower down here of this 461. Now, we wouldn't want to cross this 1.618 here, because this could then indicate that we actually have a bigger impulse developing to the downside. So 461 is going to be a zone we don't really want to cross here. Otherwise, this could start to indicate that we have some bigger impulses. Now, looking at the current structure we've got here, I'd be expecting a bounce to the upside, not taking this high if this count is in play. And then we'd want to see a 3, 4, and a 5 looking to push us down into some of these lower levels here. Now, we do have a target box in this area, and within this target box, what we do have is some levels here, some naked points of controls. We have some daily ones, and we have a weekly one towards the bottom end of this, towards this 460 level. So if we do move back down into this zone, I'm going to be keeping an eye on this 610, 538, 525, 470, and then this 460 as potential zones where we could look to actually see some kind of an interaction with these naked points of control that we've got lower down here. So going to be keeping an eye on that level if we do see price come down into that yellow box area. Now, that would align still with the idea here that we could be looking for this as a flat correction. It would, however, mean that we've gone past this 1618, which is not very common in the B wave. So it would then become more likely that either we are looking to break down directly here in the WXY, which we're going to go over in a second here, or alternatively, we are looking to form that bigger impulse to the downside. So we need to be very careful that if we do start to form impulsive structure down here, we could start to get things like this, where this becomes 1, 2, and then we get a bigger 3, 4, 5. And then we'd have to start looking at the idea that we could have this as another 5-wave move here, and then this becomes another 4th and a 5th, and we start to break down. So these wave 2s or B wave highs are going to become very important here moving forward. If we see these maintained, then the possibility is still there that we could look to actually form impulsive structure to the downside. Now, if, however, we are looking at this move as the end of that Y wave, there are a couple of things I'm looking out for. Now, these are lower probability because we would be looking for things like diagonals here. And what I would be saying is that as long as we hold this 861 line, potentially we could start to form something like this, where we get this as ABC for a wave 1 here. We're looking for this potential of a wave 2 and then this wave 3 to the upside. Now, once again, there isn't really a lot to go off of this move unless we have something like this is a flat, and then we're looking for a 3 afterwards. Then potentially we could be looking at a bigger 5-wave move, but we don't have enough evidence for this. And at the moment, this is just looking like a 3-wave move to the upside. So we need to be very careful that this isn't just a intermediate move here, and we're going to look to break down. So this high here of this 983 is going to become important within this idea. If we stay below that zone and we look to continue to only get 3 waves up, the probability is that we're going to continue on to the downside. However, if we do start to see price rallying to the upside here, I'm going to be looking out for that potential of a 3-wave move to the upside, which is not allowed to cross this 1279. If we do get a bigger 3-wave structure like this, then we could potentially start to form a diagonal pattern here, where we'd be looking for an additional 4th and a 5th looking to play out. And then this could actually indicate the beginning of a bigger move to the upside. So we'd have to keep an eye on that if we do see price starting to react in that way. Now, if we want to say that we are looking at this lower move, once again, this is lower confidence because of the fact that we would be arguing that this is a diagonal. What we'd have to say, what we'd be looking out for here is once again the same idea. Now, the problem with this is we'd have to say then that this is a expanding diagonal. The only way we can count this as 5 waves would have to be to say that we say this is 1, 2, 3, 4, and 5, but I don't like looking at it like that because of the fact that this would then be a bigger wave 2. So this just looks like a 3-wave move up at the moment, and the move down is potentially still only 3 waves. So if this just becomes A, B, and C, and we see a move down here towards this 893, but we continue to hold this support, then potentially we could look for a reaction in this zone, and we could look for a bounce to the upside. So the way I'm looking at this is that this is our C wave 1, 2, 3, 4, and we're looking for this move to actually come back down into the zone of this 896 to this 889. We have, however, broken this low here. So because we broke this low, we need to also just be on the lookout that we could just see this move starting to actually come back up and find support and then looking to move away. If, however, like I said, we fail to break these highs and we continue to set a lower high here, then we need to be very careful that this doesn't start to extend to the downside here and become a bigger 5-wave move. So this is the bullish potential at the moment, where we could be looking for a little bit of an upside move, but it is a lower confidence idea. So we need to just be respectful that the clean accounts at the moment are those more bearish ones, where we are looking for that continuation to the downside. Now, moving back out here onto the daily, the other way we can look at this move to the downside here is arguing that this whole structure is just a bigger W and X, and we're looking for a Y wave. Now, if we're looking for a Y wave, the minimum requirement would be this 495, and the 1-to-1 actually puts us down here towards this 201. This would mean that we could potentially look for an interaction with this level here, which would be quite an interesting zone to keep an eye on. If we do move down here, we can see between this 786 and this 854, we do also have this target box here sitting in this range of this 341 to this 276. So we're going to be watching that area if we do continue to look down. So this is why we need to be careful here, that if we do continue to set these lower highs, we could start to see a bigger 5-wave move to the downside, looking to push us into these zones. So this would be the idea here, where effectively what we have is that this X wave could actually complete here as a triangle, which would look something like this, where this is A, B, C, D, E, and then we're looking to break down directly. Now, if that is the case, and this is a triangle here, what we could be looking for is something along these lines. So we're actually going to turn off this higher degree count. Now, if we are looking at this move as just A, B, and C, this once again could mean that we have a completed A wave over here. So if we do see a three-wave structure that bounces to the upside here, but we fail to break back above this 786 line here at this 1749, then potentially we could start to see this move starting to break down in the C wave once again. This would be looking for the continuation down here in another three-wave move for the Y wave, and that would then potentially look to push us down towards this 0.618 level here at this 495. We can see that the 1-to-1, if we did bounce up here towards this 50% zone, would actually push us back down into that level. The higher we bounce here, the higher that target becomes as well. So we'd have to be very careful here on how we look at this move. If we do continue to hold this level and we look to rally up here, I'm going to be watching out for this area as a potential rejection zone within this bearish count, where we could still see that continuation down, and then we could look for some of these lower targets. So we need to just be aware of both sides of the coin here. Now, what we need to be aware of is that if we are looking at this option where we are within this B wave, what we could then see is that this move could still look to bounce to the upside here, where we could look to move up into this zone. And if we're going to look at this as our A wave, we're going to take this as our B wave and look at that C wave. Once again, this pushes us right up into this typical zone of the 0.382. If we do look to push up higher than that, we've got the 0.5 here at this 1352, which will also be an interesting zone to keep an eye on. And then the higher up here, we have the 0.618 at this 1503. So these areas are going to be very important. If we do continue to hold these lower highs, though, we need to just respect that fact that this could start to extend to the downside, but we're only going to really get that confirmation that we're starting to get any kind of an extension here by actually getting a bigger move down here past this 619. That would then confirm the idea here that internally we have this potentially as another 1, 2, 3, 4, 5, and that would then mean that from within this structure here, we're actually getting some extension to the downside, which would align with actually coming back into those lower levels here once again towards this 1-to-1 level, which would be this 501. Or alternatively, if we do look to break down deeper, like I said, we've got this bit of structure here between this 694 and this 278 that I'm going to be keeping an eye on. Having a look at the daily pivot points here, what we can see is that we printed lower CPR lines, we came into these and we rejected to the downside. Now, we're currently sitting below yesterday's low, which is sitting here at this $9 area. If we do look to continue down here, some targets would be this 893, 877, 853 and this 836. If however we continue to hold this level and start to reverse back up, we need to be very careful of resistance coming in between 913 and 922. If however we bounce up above this level, there is still potential to find resistance here at this 934. We have yesterday's high at this 942, and then we have other targets 958, 975 and this level here of this $10. Now if we flip this over on to the weekly, what we can see is that we are currently underneath our weekly CPR lines here, the central ones. Now if we do continue to look to break down, what we do have here is that this 867 is aligning with some of these lows. I'm going to be keeping an eye on this level towards that 867 to see if we get a reaction this week if we do continue to break down here. Other targets for this week to the downside would be 815 and the 746. If however we start to see price holding the zone and looking to push back up, once again, we need to be careful of resistance coming in between this 927 and this 949. Above these levels, other possible targets, if we reclaim these central lines, would be this area here of this 988. Now, in the previous week, we didn't actually touch these weekly central CPR lines, so we need to also be careful in between this 1022 and this 1049, because these could be potentially strong resistance here because we haven't had an interaction with them in the previous week. This would also align with something like a move up towards this R2 line here at this 1059. So we're going to be watching those levels. If we do start to see price rallying to the upside here, going to be keeping an eye on some of those zones higher up there. Now, if we move over onto the monthly CPR lines, what we can see is that these are very tightly spread, which is indicating volatility. Over the month here, we did see price move up into these, find support, and then rally up and hit our R3 line. Now, we have actually come back down here and we have started to lose these central lines. We aren't very far away from these. So once again, within that idea where we could see this play out as a bigger corrective move, going to be keeping an eye on this $10 level as a potential important psychological level, as well as having these CPR lines here. So any kind of a 3-wave bounce to the upside could then still indicate that we get that continuation down, and we'd be looking for some of those lower lows to come in. If, however, we look to start rejecting directly down here, some targets for this month that we need to keep an eye on to the downside is this 851, 780, and this 698, which would align with some of those ideas of us breaking down. Now, if we do look to actually hold these levels and look to rally and get back above these central lines, which is between this 938 and this 928, potentially then we could look for a retest of some of these higher targets, $10, 1086, and this 1159 for the remainder of this month. Okay, so I'm going to leave the video there. I hope you found it useful. If you did, please smash the like button, hit that subscribe button if you haven't already, turn on those bell notifications so you never miss a video. Leave us some feedback down below, and also in the description you will find a link to the Discord. Come check it out, it's free to join. Everyone have a great day. We will see you in the next one. Take care.